So you've been wanting to research companies, but you don't necessarily have the time to do it yourself, or you don't know how to do it yourself. In this series of videos, I'm going to be going step by step through my entire process from beginning to end on how I find companies, what I look for when I do my initial research on the companies, if they pass my initial research, how do I value and evaluate them after reading their financial statement. I will go step by step, including valuations when we get to that point, in how to evaluate companies. My name is Jason Rivera, and welcome to Value Investing Journey Case Studies. Hey, Jason here. We finished up last time in this case study series we talked about the 3 Filipino companies, or let me back up a little bit. In this case study series, so far we've looked at all Filipino companies that are ADRs. Found 3 out of, I believe it was 44 that went on my watch list. None right now I'm going to do further research on because they are either overvalued or they have too much debt right now, for too much debt compared to profitability or cash or balance sheet strength or whatever the case may be. That I'm not going to take a look at those companies further right now. Then we did a recap of the series, talked about the 3 companies. We went over the 3 companies that were put on my watch list. And if you want to see those videos, you can do so. Should be left, right, below, depending on where you're watching this. They should be on YouTube or linked somewhere if you're watching this on the blog, wherever. You can watch those. Now, we're going to get into the Australian companies. I'm partway through, I believe it's 182 or 188 Australian ADRs. So far on this list, I found a few companies that looks like they may be potentials, but this first company we're going to talk about today is ASX Ltd ADR. Stock ticker ASXFY. This is the Australian Stock Exchange. So this is going to be very similar to the Philippine Stock Exchange that we already evaluated. If I remember right, the stock ticker on that PHSYX. But again, that's in one of the other videos. If you want to watch that one, this one will be very similar. I love stock exchanges because of their, frankly, because of the reasons we'll talk about here. So let's just get right into the analysis. 9.2 rounded up. 1. Okay. What is the ticker? ASXFY. 9. Okay, so definitely not an almost $1 trillion company like Microsoft. 0.2 rounded up. 3.5% dividend. And then, right, I've already got the tabs open, so I'm ready to go. Okay, first thing kind of jumps out to me here is the revenue jump to be expected over time for this kind of operation. Good sign. I don't note that. It's just kind of a, wow, that's even better than I was expecting. To be perfectly honest with you, 70.4%. That's insane. Why is that insane? First of all, I look for anything over 10% on a consistent basis, which is, I'll tell you right now, just from glancing at the numbers, it is, and we'll get to that next. First, I look for anything over 10% on a consistent basis. Think of it like this. You want this number to pretty much always be higher. The higher these 2 numbers right here, to be higher, the better. For every $1 in sales this company has, it produces 70 cents in operating profit. That's another way to think of it. That's insane. So 5-year average. 9.5 plus 0.4 plus 67.5, so 69.8% rounded up. That's insane. That's probably, off the top of my head, that is definitely the highest 5-year average operating margin I think I've ever seen. At least that I can remember. Share count from rows. 174. 2008 to 3 million. Rise of about 10.9% in that time. Not great, but it's not terrible either. So on average, that's what, about over 10 years, that's about 20 million shares, so about 2 million shares per year. Pretty close to that. Again, not great. You typically almost always want to see this number going down unless the company is overvalued. Then you want to see the company issue shares. Book value per share fallen a little bit. That's a little surprising. 18.15. $11 to 14.98 in the trailing 12-month period. About 17%, 17.5. That is a little surprising, but we'll see when we get to the balance sheet what that's about. So next, ROIC, 10.3. Plus 9.8 plus 10, so it's about average about 9.9% over the last 5 years, which is fantastic. For this number, I look for anything over 10% on a consistent basis as well. 5. 11.02 is the 5-year average. So just 11 rounded up. ROIC, this is to be expected. This is still an insanely high number. I look for anything over 5% on a consistent basis here. So this essentially means for every $1 in sale the company does, it produces 66.7 cents of free cash flow. Again, absolutely nuts. So 66.7. So 3.2 plus 52.8 plus 55.4 plus 59.2 plus 52.6. So 56.6%. Again, absolutely nuts. 56.6. Free cash flow margin, which again is, I didn't expect it to be that high, but you expect a company like this, which is a stock exchange, pretty much just a platform where companies list their shares to produce a ton of free cash flow. You also expect something like this, 68.8%, which I'll note. 68.8% cash. The company has zero debt. It has zero. Short-term and long-term debt. So its balance sheet is 68.8% in net cash. Incredible margin of safety is what that means. And their liabilities, frankly, they shouldn't have hardly any liabilities whatsoever. So, and they don't. So their current liabilities are other short-term liabilities. Have to figure out what those are. If we go further into researching this company, but it frankly shouldn't have that many liabilities and no cash conversion cycle, because again, they're just a platform, so this doesn't mean anything for them. Okay, so here's where we get to the important part. This is where, if a company meets my criteria on pretty much everything listed here, which this one by far does, this is where we get into issues, is the valuation. So let's see, 9.2, round it up. Oh, and before we get to this real quick, I want to make note of this. You'll see this with a lot of foreign companies. I'm not sure why, because they should have access to all this information. You'll see they obviously have access to the balance sheet, the cash flow statement, and their other metrics. So I don't know why this is common with foreign companies to not show income statements on Morningstar, but it is very common, frankly. So it's just something to watch out for. And I'll show you how to figure out the EBIT and stuff from here. So go back to the balance sheet. Okay, something else to note. Over here. Oops, over here. I don't know why this is still running. These are listed in US dollars, so we need to convert this number to Australian dollars because these numbers are listed in Australian dollars. So got this open over here, which is my currency converter. So 92000, so 12319, 12319 rounded up, which I will make a note of here. 12319. Okay, and then we'll go from there. Nine minus 5684. Receivables, investments, goodwill. That's from an acquisition likely. Deferred taxes, payables, and other liabilities. So they don't have any short or long-term debt, which we already knew. But if we were to research this company further, we need this. I mean, other liabilities can literally be just about anything. So we need to figure out what that is. But their EV, let's see, preferred stock, minority interest, none of that. So their EV is 6.635 billion AUD. 6.635 6635. And their EBIT. Let's get to that. Obviously, again, I'll show you here. The income statement is blank. So what are you to do? You just go over here and either see it here in the trailing 12-month period, or you can actually calculate yourself from here. They should be exactly the same. Let's find out if they are. 789 times 70.4%. Okay, 555.5. Round it up. So 5.5, and then the free cash flow should be right here. Oops, I need to make sure. Okay, these are in AUD million. Again, you need to be cognizant of making sure all these numbers are exactly the same. We converted the original number to Australian dollars, so all these are in Australian dollars. You notice this is in US dollars, so you need to be aware of that. Make sure they're all the same. Okay, so getting back to their cash flow statement, which is 527 in the trailing 12-month period. $527. So, another thing before we get to talk about that I want to note here is you see these blanks here and here on the balance sheet and the cash flow statement. A lot of foreign companies, again, something with foreign companies, I'm not sure why. I don't know if it's regulations. I don't know if they don't have to report as much or what. But a lot of foreign companies who list as ADRs in the United States only release their information either every or twice every year, so biannually, or they only release their information once per year. That is another common thing with these ADRs as well, that people frankly don't either know about or they need to get used to if they're going to be in this arena. So they only report numbers once a year, typically twice a year, and I would say probably more than half probably do that once a year or twice a year thing. I would say probably fewer than half of companies I've researched in the ADR arena report all 4 quarters. So just something, again, to be aware of. And typically, if you want, you can go on the company's website to find out more information. If it's a foreign company that doesn't speak your language, for example, English here, then you better hope they translate their financials into English, or I stay away from it. Frankly, Google Translate I would trust for some non-technical information, like a fiction book or something like that, or a joke or something. But for highly technical, highly important information, I would not trust Google Translate. So my kind of criteria for a foreign company is they have to print financials on a regular basis, and they have to be audited, and they have to be in English. Because again, I do not trust Google Translate when it comes to highly technical documents like this. So that's just my personal criteria. So let's get back to this. So 6635 divided by 555.5, 11.94. Oopsie. 94 and 6635 divided by 527 equals 12.59. So I look for anything under 8 to be considered undervalued, at least on this relative basis, this early relative basis, with my criteria. So this company right here, and typically 8 to about 12 or 8 to 15, I consider about fairly valued. So I'd consider this company about fairly valued right now. However, because of its massive margin of safety, its massive, gigantic margins, its huge free cash flow production, we are going to research this. So this is actually something I haven't done in several months at the very least, and personally, and that was for clients. So me finding a company that I'm going to research fully for myself hasn't happened. I haven't researched a company fully myself, a brand new company. I have researched my companies I own, but a brand new company I haven't fully researched in almost more than 3 years now. So this will be a first, and this will actually be a treat on the blog to kind of go over this and all these videos with you. Before we get to anything else, let's finish off these calculations though. 8.4, 7 divided by 6635, 7.9. Okay, so now that we finished that off, what does that mean? Because if you haven't been to this blog or watched any of my content for longer than 3 years, you don't know what this means, frankly, because I haven't done it in more than 3 years. For myself, I've done it for clients, privately, stuff like that, and reevaluating companies I've already owned. I've done stuff like that. But a completely brand new company, this will be fantastic. Fantastic learning experience, fantastic teaching experience, and maybe, you never know, we'll find a company to invest in for the first time for me in about 3.5 years. So next steps from here is usually I would continue going with the Australian companies to kind of go from there. What I'm going to do here, because we found something that is about fairly valued in my early estimate, is instead of going to further Australian companies, I'm going to dig into this company's most recent financials. Of course, I'll note anything of this particular note. I'll take videos, write blog posts, all that kind of stuff. But you'll see kind of the whole process I do when I go through researching a company. This is just the very, very early portion. This is not even 5% of the research I do on a company. So you'll get to see the whole process possibly. I'm not quite sure how I'm going to do it yet, because if this company turns out to be one that I do end up investing in, I'm not sure how I'm going to release that content, frankly. So, because I haven't done it in 3.5 years, and I've changed a lot since then. So, but we'll see. You'll watch this entire process with me as it unfolds. Those in the training vault will get access to all of this information first, because this is the first company we found that looks like it may be a potentially great investment that fits my ultra strict and specific criteria. Training Vault subscribers will get this information first. Any videos I make about this company, they will get first, sometimes weeks in advance. I'm recording this video now, and it won't be released for a few days, but I'm going to make another couple videos that won't be released for a couple weeks. So Training Vault members only will get this information before anyone else. If you want to subscribe and get this information as quickly as I release it, make sure to subscribe to the Training Vault. A link for that should be below. If you want more information on the Training Vault, more information for that should be below as well. But this is frankly fantastic. I hope you can hear my voice. I invest in less than one out of it, by my estimates. I invest in less than 1 out of every 1,000 companies I look at. So to find this company that is a potentially great investment this early in this kind of case study process, I think this is video maybe number 10, if that, 8, 9, 10, somewhere around there. Very exciting. Haven't found a new company to invest in almost 3.5 years. Very excited. Haven't seen a company with these kind of margins pretty much ever. So fantastic learning experience here for everybody, and again, maybe we'll find as we go through this a potentially great investment, but we won't know for sure until we dig into the financial statements. So and the 10Ks and the proxies and the 10Qs. Actually, I think it's 20F. I don't remember if Australia does 20Fs or not, but a lot of foreign companies do 20Fs, not 10Ks. Same thing, just the foreign version of it. So, um, so we'll get to talk about all this and a lot more in this ongoing case study, what will be going on about ASX Ltd as we go through it. And you'll hopefully learn a ton and get a ton of value from this. So, and again, maybe we'll find a company to invest in. So, I hope you enjoyed this. If you did, make sure to watch our other videos on the Filipino companies, case study videos. We've got free trainings. We've got value investing in your car episodes where we talk about book reviews, all that kind of stuff. If you're watching this on YouTube, make sure to subscribe and hit the bell so that every time we release a new video, you are notified of it. And we are recording new videos every day. So you want to make sure to subscribe and hit the bell if you enjoyed this. If you enjoyed this series in particular, and want to know more about this company and follow along, again, make sure to subscribe to the blog for free. You'll get free access, or you get 5 free gifts if you subscribe to the blog. Plus, you'll get all the posts every week. You'll get those sent to your email address. And if you want this information faster than anybody else, you need to subscribe to the Training Vault. Again, information for that should be below. You can subscribe to that now for a limited time, as low or starting as low as $19 a month. There are different packages we offer that offer more stuff. But as little as $19 a month, you can subscribe and gain access to these and other training videos. Pretty much all of our training videos are going to be in there at some point. We've got, I think, as of this morning, 325 videos on our YouTube channel, and most of those are locked up in courses. But you will gain access to all of those over time as a member of the Training Vault as well. So not only we get that, but you get all those training videos as well. So you get a ton of value for as little as $19 a month. But I hope to talk to you the next time, or I hope to see you and interact with you as we go through this video. Let me know what you thought of ASX Ltd, the Australian Stock Exchange, in the comments below, and I'll see you in the next video. Thanks. Have a great day. Bye.